Welcome to this press conference. Thank you for coming today to the launch of our trade forecast. I'll make a few remarks on the revised outlook, after which I'll be happy to take questions. And as Dan said, we have DDG González and Coleman, our lead forecaster. They will both also be happy to take questions on, in particular, the underlying methodology and technical details. I want to preface our discussion today by recalling the role that trade has played in keeping the global economy running amid the incredible shocks associated with the COVID-19 pandemic. Merchandise trade plunged amid the lockdowns in 2020, if you recall, but its subsequent rebound has helped keep the world supplied with food, medicines, vaccines, and other essential goods, whilst also helping to propel economic recovery in many countries. Global merchandise trade has been at record highs since early 2021. Digitally delivered services have also registered healthy growth, even as travel and transport suffered. However, the pandemic and the fiscal and monetary policy response to it have produced lingering side effects, including supply chain disruptions and rising prices. Inflationary pressures were building and affecting a growing array of goods and services, even before the war in Ukraine disrupted global supplies of foods, fuels, and fertilizers. Today, the global economy faces a multi-pronged crisis. Monetary tightening is weighing on growth across much of the world, including in the United States. In Europe, high energy prices are squeezing households and businesses. And in China, COVID-19 outbreaks continue to disrupt production and ordinary economic life. Low-income developing countries in particular face serious risks from food insecurity and debt distress. These factors are weighing heavily on the outlook for global trade. After updating our forecast for world trade in 2022 and 2023 in light of these shocks, the WTO now expects the volume of global merchandise trade to grow by 3.5% in 2022, up a bit from the 3% we forecast in April. And this is mostly due to data revisions, which I'm sure the team will be happy to explain to you. But the picture for 2023 has darkened considerably. As I had said in earlier remarks, we are now predicting a modest forecast of 1% increase in merchandise trade volumes, down from the 3.4% we had expected as recently as April. Most regions are set to register faintly positive export growth in 2023, with the exceptions of Africa and the Middle East, where export growth is projected to turn negative after growing strongly this year on the back of heightened demand for oil. We estimate world GDP at market exchange rates will grow by about 2.8% in 2022 in line with our April forecast. However, it will slow to 2.3% in 2023, down nearly a full percentage point from the 3.2% previously foreseen. Policymakers face unenviable choices as they attempt to find an optimal balance among fighting inflation, maintaining employment, and advancing important policy goals, such as the transition to cleaner energy. Trade restrictions may be a tempting response to economic distress, but these would only deepen inflationary pressures and reduce living standards and would likely make us more rather than less vulnerable to the crises we're grappling with. For instance, trade is a necessary element in responding to food insecurity. While supply shortfalls are less dire than many feared at the start of the Ukraine conflict, the situation is volatile and prices remain elevated, particularly in local currency terms. Keeping markets open for food trade will increase the availability of essential foodstuffs and maintain downward pressure on prices. Our monitoring work on food trade has pointed to some recent backsliding on restrictions, so we need to remain vigilant. Looking ahead, a better response to the supply chain vulnerabilities exposed by the past 2 years is to build a more diversified less concentrated base for producing goods and services. In addition to boosting economic growth, this would contribute to supply resilience and long-term price stability by mitigating exposure to localized exogenous shocks, such as extreme weather events, which seem to become more and more frequent. Just as trade was a tool that helped us to cope with the pandemic, we believe it can also help us meet current and future challenges. Thank you.
Thank you, Dr. Ngozi. Before I hand the floor to Anabel, I just want to welcome Chief of Staff Okonjo-Iweala to the podium. Deputy Director Anabel González, floor is yours.
Thank you very much, Dan, and thank you, Director General. I would just like to follow up with a few details on the trade forecast and trade statistics that might be of interest to journalists. They sometimes get overlooked, but WTO quarterly trade statistics are released together with our trade forecast. Merchandise values and volume indices are produced in conjunction with UNCTAD and will be available shortly for Q2 through our online database at stats.wto.org. Data on trading services are on a slightly later schedule and should follow around the end of October. Now, on trade volumes, the first thing I would draw your attention to is the volatility in the quarterly data in the second quarter. For example, seasonally adjusted merchandise export volume was up 3.5% in North America in Q2. And for perspective, 3.5% is equivalent to nearly 15% on an annualized basis. Petroleum exporting regions also saw large swings in both exports and imports. Exports of Africa were up 2.5% in Q2, while shipments from the Middle East rose 6.5%. And this increases make up for the large 10.5 quarter-on-quarter decline in exports of the CIS region in Q2. Now, on the import side, North America and Europe saw volumes rise 1.3% and 1.6% respectively. Meanwhile, imports of Africa and Middle East surged 6.1% and 5.5% as oil producers in these regions found themselves flush with revenues that could be directed at imports. In contrast, CIS imports were down a remarkable 22% quarter-on-quarter. Another notable feature of the data is the weakness of Asia. Asian export volume was down 0.5% in Q2, while the volume of imports declined 0.3%. This stagnation was due in large part to production and shipping disruptions as a result of COVID-19 outbreaks in China. Further outbreaks in the second half of the year could continue to hold back Asian trade volumes. Next, the purchasing managers indices shown in chart 7 have just been updated for September. The headline global PMI continued to deteriorate, falling to 49.8% from 50.3%, while the highly predictive new export orders index dropped to 55.9 from 47. Values less than 50 signal contraction in these indices, so this is very sobering news. The headline index was the lowest since June 2020, while the new export orders index suggests an accelerating downturn in trade. This data will need to be monitored closely in the coming month. And finally, a word or two on services. We do not forecast services because volume measures are generally not available, but they do constitute an important part of trade. On a positive note, travel and transport have been strong due to a recovery of international tourism and also rising prices. Tourist arrivals almost tripled in the first 7 months of 2022 compared to 2021. That's a growth of 172%. But this may be a high water mark as the uncertain economic environment will probably weigh on travel in the near term. Finally, shipping rates have fallen sharply, with the Freightos Baltic Index dropping to 4,000 on 30 September, down from 11,000 on 10 September last year. A few months ago, this would have been seen as a positive sign that supply chains were getting back to normal. But today, it could be taken as yet another sign that global demand is cooling. Thank you.
Thank you, Anabel. I'll now open the floor to questions, starting with those journalists here in the room and then moving online. Again, please raise your real or virtual hand if you want to ask a question and identify yourself when called upon. And again, we have interpretation in English, French, and Spanish. Use your headphones for those in the room. Online, you have the channels as well in the various languages. I saw the first hand up. The first question goes to Bryce Bashuk of Bloomberg. Bryce, you have the floor.
Hi, good morning. Thank you for taking my question. Your report says that inflationary pressures may have peaked and warns that central banks risk overshooting, which could cause a recession in some economies. Dr. Ngozi, what advice would you offer to Fed Chairman Jay Powell and your friend Christine Lagarde about the risks of tightening too tight? Thank you.
Well, that's a really tricky one. And, I would be loath to be offering advice to central bankers, since I'm not a central banker sitting there having to manage this. They're in a very difficult position. And I think, the issue is, what are the causes of the inflationary pressures? If you're responding to causes that do respond to raising interest rates, then, then that is fine. But there's some thought that one has to watch out, that if there are supply side constraints, that are not really responsive to interest rates, then do you risk overshooting? Besides, there's a lag in looking at these numbers. So since it's a lag, there's also a danger that you could misjudge and overshoot. And that's what people are worried about. Has it happened? We don't know yet, but there's worry on the markets that with the lag, this could happen. All we're saying is that hopefully this won't happen, this overshooting.
The next hand up was Laurent Sierro of ATS. Laurent, vous avez la parole.
Yeah, thank you, Dan. Thank you, Director General. Good to see you again. There was a lot of enthusiasm after the success of MC12, and now the general outlook seems to be quite bleak and very difficult. So what kind of consequences do you see on the mood of the member states and their ability to negotiate in the important discussions ahead for the organization? Thank you.
Thank you very much. Yeah, there was and still is some amount of enthusiasm left. I wouldn't say it's all gone, but obviously the outlook for the global economy has darkened, and all the risks are on the downside. And so this is causing a lot of worry. And if you sort of load over the geopolitical tensions that we're seeing, some of it arising from the war in Ukraine, then you can see the mood. There's a lot of worry because of uncertainty. Business doesn't like uncertainty. Economists don't do very well with uncertainty. So this is worrying. But at the same time, I think that the good mood that prevailed after MC12 gives us some basis that the work we have ahead of us, we have now shown we're capable of coming together at very difficult times to do deals that are multilateral. So I think some of that confidence back, and as you said, a bit of good feeling, leads us to believe that in spite of the difficulties facing the world economy, we could still do some of the work ahead of us. I mean, MC12 was good. We got some success, but that doesn't mean our work is finished. And we should absolutely not be complacent just because we got some successes. We have ahead of us, we need to work hard to be part of the solution to the global problems we're seeing now. So for instance, on food and food prices, which is a big worry, particularly for poor people in rich countries and poor people and poor developing countries. What can we do? We have to monitor what we're doing, what is happening among our members very strongly to make sure that the promise, the decision, not even, but the decision on on not having export restrictions for World Food Program, humanitarian purchases, that is maintained. You can see what is happening in Somalia now, which is very difficult. Secondly, generally, there was a declaration to try and keep export restrictions down on the rest of food trade. And I think that was going, I would say, relatively well. We had gone down from about a month ago, I said there were 57 export restrictions on food, fertilizer, and other inputs. We came down 15. So we phased out 15 and we were actually at 42. So we're feeling quite good that things were going in the right direction. But I have to say that I'm not so pleased now because we've gone back up. We are now back at 53 restrictions because 11 more have been put on. So the trend is kind of going back up. So we want to be part of the solution. So this is a strong message to members that they should reverse this and go back to the downward trend we had before. And I think that once these numbers, the beauty of transparency is once the numbers are out and we see what's happening, members tend to act in the right way, and I hope they will continue to do so.
We have another question in the room. It's from Assis Moreira of Valor in Brazil. Assis, you have the floor.
Je vais poser ma question en français, vous pouvez répondre en anglais. Dr. Ngozi et Madame González, le Brésil, la plus grande économie de l'Amérique latine, la plus grande du monde, va dans une transition politique. On aura des nouveaux présidents. Qu'est-ce que vous diriez au prochain gouvernement qui va arriver dans un mois, vu que c'est une économie très forte dans les exportations de commodities, est-ce que vous diriez que c'est une économie qui, disons, n'est pas très affectée par la situation actuelle, vu que les commodities sont en hausse? Et quel défi vous pensez que les prochains gouvernements peuvent affronter dans la scène internationale?
Well, of course, we wish Brazil very well in its democratic exercise, and I'm sure Brazilians will get through and decide who they want to help run the economy. So we're all waiting eagerly, but there's absolutely no doubt that Brazil is a food powerhouse in the world. And so to that extent, we're hoping that, they will continue to maintain a strong eye, whoever it is that leads on the agricultural sector, because we need Brazil to continue to perform well. To that extent, the issue of access to fertilizer, when I was last in Brazil, was surfaced when I met with President Bolsonaro. And they were trying very hard to make sure that they have adequate supplies of fertilizers and other inputs so that next year's production and harvest will not be impacted. We are saying to our members, keep restrictions down so that we have a freer flow of fertilizers and inputs because production for the next season is key. So we're very much supportive of any moves to keep Brazil producing and supporting the world.
Let me just add to that Brazil plays a very important role in the multilateral trading system. We have been working very closely with Brazil, for example, in making MC12 a success, and we look forward to continued deep and strong engagement with the Brazilian government once the new administration comes into office. Thank you.
We have one more question from the room, and then we will go online. I promise those online, we will take your questions. It's to Christian Ulrich from DPA. Christian.
Thank you, German press agency. You are mentioning several shock waves. I guess this is the war, the pandemic, and also climate change. It looks like efforts to mitigate climate change are hampered by the other crises. Can you talk about that? What is the role of trade in mitigating climate change, or how important is that in relation to the other crises that are hitting? Thank you.
Well, thank you very much. I think the fear, or what we would say to policymakers, is not to allow the short-term responses to the crisis, to overlook some of the longer-term goals that the global economy or the world is looking at, which is to try to do whatever we can to move to net zero by 2050. Since we see the impact of climate change is everywhere. So to that extent, trying to see what happens in energy markets. It's very understandable that policymakers are worried when you have a 400% increase in prices for energy in Germany, a shortage that leads to factories closing. That is very worrying because Germany, for instance, is also an engine of world growth. So we know all of that, but I think the advice is how can we meet the near-term goals in energy and food without necessarily too much undermining the longer-term goals of looking for climate-friendly solutions. Now, trade can play an important role. I often say that trade is an adaptation tool. Adaptation to climate change, trade is a tool. Because how do you adapt when something happens to you? You look for solutions. You look, for instance, if there's an immediate shock, you need goods and services brought to you from elsewhere that you cannot produce or have been damaged. Trade facilitates that, bringing goods and services from one place to the other, bringing food. The other thing is that trade is also instrumental, even in climate change. You know, making technologies and adaptation source materials and goods move from one place to the other cannot be done unless you have trade. So trade is essential to free flow of trade. Is essential to help the world adapt to both climate change, to food shocks, to energy shocks. You can see that, you know, let's say European leaders are looking at various markets where they can trade and bring in more energy supplies. But of course, the infrastructural issues that are necessary to move energy from one place to the other sometimes takes a little bit of time. So in short, trade is a facilitator. I must say something, you know, I talked about trade restriction measures by our members, but I just want to quickly add that whilst we're urging members to limit the trade restrictions, there are actually many of them also implementing trade facilitating measures. And we see about 46 of those measures that actually help trade clear away the bureaucracy and the barriers and enable trade to move more smoothly are also being implemented. So I hope we lean more to that side. Thank you.
We'll now go online before coming back to the room, I promise. Before we take the questions online, I'll ask everybody to put the earpiece into their ears because the only way you can hear the question online is if you have your earpieces in. So I've got mine in. We'll start with Sarah Ann Arup from Politico. Sarah Ann, you have the floor.
Thank you, Dan. Hello. My question is, to what extent does the data show that Western sanctions against Russia are working? And also, if I may, which sectors are you most worried about for the future of trade flows? And in which indicators should we be keeping an eye out for over the coming months? Thank you.
So multiple questions there.
Yeah, we're trying to keep well, maybe on the question of I'll pass it to Coleman.
I can just address the question on the impact of sanctions. We did see large quarter-on-quarter declines in the second quarter for the CIS region, which includes the Russian Federation. The region's exports were down. I'll confirm the figure in a second, but around 10%, and the imports were down around 20%. So certainly there is an impact on trade of that region. How much you can attribute to sanctions, how much to other factors, it's difficult to say, but the export revenues from oil and other commodity prices, though, may be higher as a result of higher prices for agricultural goods and energy products. So I would also look at the trade values as well to get a complete picture. In terms of sectors, of course, there's energy and all the sectors that we've identified as central to the conflict, fertilizers, food. Of course, these things are difficult to distinguish in our trade data here. These volume estimates are just for volume of trade overall. Essentially, we take total merchandise trade and deflate it by an average price index. So we don't have volume estimates for individual products, but those data will be available in the coming months, and we will be reporting on those going forward.
Thank you. Also online, we have John Zarakostis. John, could you identify the media you're representing, and we'll take your question.
Yes. Good morning, Dan. It's John Zarakostis for France 24 English channel and Penske Media in the US. My question is to the senior economist on the podium and Dr. Ngozi. What are the prospects for 2023 for manufacturing exports, given the input costs are going up so highly? And I was wondering, Coleman, if you have a worst case scenario, if the conflict in Europe widens to go to an all-out conflict between Russia and NATO. Recently declassified documents showed that the Soviet Union and the US were close to a nuclear showdown in November 1983. Thank you.
I want to comment on 2023, and I'll
Sure.
comment with that.
On 2023, we don't specifically model geopolitical risk in our forecast, but we do have error bands around the forecast that provide a zone of confidence around the estimates. And trade in 2023 could decline as much as 2.8%, and or growth could be as high as 4.6%. So there's a great deal of uncertainty in the estimates going forward, simply because of the nature of the conflict and also the challenges faced by monetary policy and fiscal policy going forward. So
I just want to add to that, given the uncertainties and the risks the world economy is facing, that the part of risk management that we think would be good is deconcentrating, continuing to manage risk by diversifying manufacturing and production globally, not just concentrating them in certain countries or certain parts of the world. And so instead of talking of deglobalization, I want to come back to my favorite word, which is reglobalization, and trying to manage risk by bringing in those countries where the conditions are right as centers also to relocate and diversify manufacturing production. And of course, that can help manage manufacturing costs because some of those are lower cost production centers than China is at the moment.
We'll take another question online before going back to the room. We have Philip Blenkinsop from Reuters online. Philip, the floor is yours. Philip? Okay, maybe we'll go back to Philip when he's can hear us. In the meantime, we'll go back to the room. Jamie Keaton of AP. Jamie, floor is yours.
Hello, Dr. Ngozi over here. Hi, nice to see you again. Thank you, Dan. You mentioned that there's a concern about the developing world for next year. You mentioned in the report, it says, let me just quote the line, if you don't mind. Most regions are set to register faintly positive export growth, with the exceptions of Africa and the Middle East, where export growth is projected to turn negative after growing strongly this year. What should policymakers be doing to help developing countries weather this situation, which we've already seen has caused a lot of strains on countries. What should governmental leaders be doing to help ensure through trade to try to help ensure that the impact is mitigated against developing countries? Thanks.
Well, I think some of this is through trade, but also some are through non-trade financial factors. You know, developing countries, because of the increasing interest rates, some of them are facing serious debt distress. And therefore, you know, with an eye to that, I think some debt workouts and debt restructurings will be necessary if you really want to help, because many of these countries don't have the fiscal space with which to maneuver. And if you want to help them through trade, they need money to import more food items, to import fertilizers and other inputs. So we need to create that space for them. So I think we work with the World Bank and the IMF. We actually have a multilateral leaders task force that is operational, that is IMF, World Bank, WTO, WFP, FAO, and we meet together. We just met 2 weeks ago in New York, talking together. What does World Bank have to do? What does IMF have to do? What does WTO have to do? So I think that's the approach we're taking. And that means the IMF is coming with the resilience and sustainability trust. It's also, which is also coming with some other emergency instruments to help countries have access to food and fertilizers. The World Bank is trying to target countries, poor countries, to make sure that they have additional access to resources. FAO, World Food Program are doing their part. And on our part, we are trying to make sure trade restrictions are down, because if you have money, but then you have all these restrictions, you cannot purchase. And we're trying to encourage members to do trade facilitation. So that's it. Thank you.
As well, I'd just like to mention that exports and imports of Africa and the Middle East tend to be dominated by a handful of large energy exporters. But within those regions, most countries are not in that category. So they're just as vulnerable to the rises in commodity prices and food prices and energy prices as anyone else.
Sorry, just one more thought. In addition to the short term, one of the things that policymakers should also be doing is seeing how to increase the productive capacities of these countries. And so working with these organizations, the African Development Bank has just put 1.5 billion for countries, and 23 countries have already taken advantage to produce. The World Bank is doing the same. So supporting them to produce more where they have the land and the resources is actually a longer term, better response to the crisis.
Dr. Ngozi, I know you have meetings around 2 very busy days. If you can indulge us and take one final question. It's from Philip, who we tried to contact earlier. Philip seems to be having some technical issues, so he submitted his question in writing. He notes, you, Dr. Ngozi, said the risks were broadly to the downside for 2023, and that there is a wide band for a range of forecasts. What would have to happen for trade growth to be below the 1% forecast? And what would have to happen for it to be below the negative 2.8% lower end of the band?
That is, the risks are certainly to the downside. I mean, somebody posed this question earlier about the worst case scenario vis-a-vis, you know, the war in Ukraine. Obviously, if the situation between the war in Ukraine, if that worsens rather than gets better, then that's going to have a huge impact. And if it gets better, it will have a positive impact. If we have many more weather events next year that really impact food producing regions, for instance, or damaged infrastructure from energy exports, all these could impact. Hopefully, on the China side, as you know, China's economic performance is rebounds a lot on the rest of the world. So hopefully, if China's economic performance does not worsen, then I think we can have a better situation. But suppose it does, that's another uncertainty facing that could lead to trade going below the 1%. So I've just cited a few examples of these risks that we are facing. Thank you.
Thank you very much, Dr. Ngozi. Appreciate your presence. We still have another 17 minutes until the embargo is lifted on the press conference. Anabel, I don't know if you're staying or not, but Coleman, I know, likes to hang around until the bitter end. So whether he likes it or not. Anabel, are you staying? Are you okay? So Coleman will be able to take any technical questions you may have, further technical questions on the report. Again, the embargo runs until 12 noon today. We ask you to respect that. Are there any other questions for the man who actually wrote the report? He knows something about it, I can assure you that. Yes, Mr. Keaton from AP.
And lack thereof. Thank you, Mr. Nee. If you could elaborate a little bit more as to how, I mean, Dr. Ngozi already talked about this, but how you got from the 3.5% initial forecast for this year to 3%. Like, could you just elaborate exactly how? I mean, she mentioned the data issues, but could you just kind of give us on the record a little bit more?
Certainly, it went the other way, actually. Our initial forecast back in April was 3% for 2022, and we've revised it up to 3.5, but I wouldn't call it really an upgrade. The reason is back in the spring, we didn't have much hard data on the impact of the economic impact, either on GDP or trade statistics, on the direct impact of the crisis in Ukraine. So what we did was we used our WTO trade model to generate some assumptions about the impact that this might have on output. We scaled down our existing GDP figures because we didn't have GDP data, proper GDP data at the time, and used those as our growth estimates. And they turned out to be pretty close to accurate. So 3.53, we actually, I think, did pretty well. The GDP figure was spot on. It ended up being 2.8 as we predicted. But there were differences in regions, so that will have an impact on the crisis, on the forecast. The other thing is, at the time of the forecast back in April, some of the regions most affected by this crisis include energy exporting regions like Africa and the Middle East, and there's only in the spring a handful of countries that are reporting at that time. So we estimate the missing ones. We do our best in that regard, and so what we've been able to do in 2020 with this forecast is refine our estimate for the year. And it could still, it could still go down or up by the, we're only halfway through in terms of the data. So by the end of the year, the final value could be higher or lower than 3.5.
If I could just follow up, you mentioned that there was a lack of clarity about the situation in the wake of the Russia-Ukraine war and the impact on trade. What about Russia in terms of communicating with WTO in terms of getting data to you guys? Are you getting a full picture of the situation in Russia and the CIS?
Trade data for Russia and Belarus, I believe, have not been they've been lagging behind the past. So what we've been forced to do is rely on mirror estimates. Essentially, what you do with trade values is, if you don't have data for exports of a given country, you can look at the imports of the rest of the world from that country and apply that to come up with a decent estimate, and then we use estimated price indices. So there's a lot of guesswork involved. At the moment, we don't have complete information on Russian and in general CIS trade flows, but so we make our best estimates, and we'll see. Yeah.
Bryce, you wanted to ask a question?
Mm-hmm. Thanks, Coleman. Wanted to ask you a little bit about friendshoring and decoupling from a data perspective.
Mm-hmm.
Obviously, there's a big geopolitical push to kind of decentralize manufacturing out of China. Wondering, are you seeing anything in the data? What are you seeing in the data? And is it kind of too soon to draw any conclusions on this?
It's too soon to draw any conclusions on the impact of like the current economic slowdown and the war in Ukraine on this. We do have data by merchandise trade data by partner, in value terms, and so we can come up with certain estimates. I would note that there has been changes in the pattern of globalization for a couple of years. You know, it's not a suddenly people are saying, oh, we need to move out of China. This sort of certain industries have been high value added industries have been moving into other and actually lower value added industries like clothing manufacture have been moving into other countries for some time now. You know, Bangladesh, higher value added industries such as electronics have been moving into Vietnam and other neighboring countries. Meanwhile, China has over for a few years now has been moving up the value chain, so producing more goods, not just relying on imported inputs and elaborating on them, but producing entirely within China. So this issue of the patterns of globalization, it's not a new thing. It's almost like the analogy that I like to cite is like squeezing a balloon. You know, it'll change, the pattern will change, it'll come out somewhere else. But we've been seeing this for a while, and it will go on. And trade allows the global economy and countries to adapt to find the most efficient patterns of production that allow you know, the greatest availability of goods for the most people. Yeah.
Philip, I know you had a subsequent question. You probably wanted the DG to answer this, and I apologize for not seeing it. I don't know if Coleman, if you want to take this question, I'll ask it anyway. The DG referred to a rise of trade restrictions and warned against more trade restrictions. There are concerns about the world splitting into two spheres related to the Ukraine war. Are we seeing a slowdown in globalization from a data perspective?
From a data perspective, not necessarily. Actually, I would say not. If you look at indicators like the share of intermediate goods in world trade, it's been steady for several years. And in fact, it's more or less been steady since the financial crisis. So you saw a rise in globalization before then, and things have kind of plateaued. I would say that the patterns, as I mentioned to Bryce, the patterns of globalization are always shifting. But globalization itself, we see anecdotal evidence of certain production processes changing from one, you know, coming back to home countries, but we don't see evidence of large scale friendshoring or nearshoring or that sort of thing.
Are there any further questions from the floor? Maya, back in the back of the room, you have the floor.
Oh, hi. Thank you very much. It's Maya Plants from the UN brief. My question is related to, does the data show in any way the impact of these programs, which are not perhaps completely operational, of reshoring production, the CHIPS Act in the US, or are you factoring that in? Was there any, I didn't see the report yet.
We have produced some estimates of world trade in semiconductors. What we saw actually, semiconductors trade was declining for a couple of years before the pandemic. So this is not a new problem once again. But that's what made it sort of an acute problem when the pandemic arose. Since then, semiconductor trade has been rising, but in terms of specific impacts from legislation in the United States or bilateral trade, I don't have that at hand.
I don't see any questions online, and I'm scanning the room. I don't see anything there. So if that's the case, I will wrap up this press conference. I'll make a slight correction what I said earlier. I said you wrote the report, you're the man who wrote the report, but of course you had support from your colleagues in the division. I just want to
absolutely lots of support from our statisticians who provide the raw data, and so I did the writing, but and the forecasting part, but the historical data, it's all down to them.
Yep. So you held the pen, but you had a lot of people helping behind that. Just want to correct that.
Yeah.
So we have, excuse me, about 7 minutes. I'm looking at the clock, 7.5 from this angle until the embargo is lifted. I'd just like to thank everyone for taking part in this press conference. I want to thank especially the interpreters for their support. That is much appreciated. We wish you a very pleasant day and we hope to see everyone soon. Thank you very much.